Hello, Smart Money 2 podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and today I'm joined with Doug Hagren. Hey, Doug.
Hey there, Kirk. How you doing today? Happy Friday.
Happy Friday.
Happy Friday, everyone.
It's Friday. It's a new Friday. We got a new pope today. It's I have to say, this is one of the funnier memes I've seen. It was a tweet from Cramer, Jim Cramer. For those of you who don't know, he's on CNBC usually and reports on stocks. And back in the day, was a very good hedge fund manager, successful in his own right. Very smart guy. And ever since he started working on CNBC, he's become the whipping boy of just about everybody. So anytime he makes a claim, it is usually a good indication that you should do the opposite. There's actually an ETF called the inverse Cramer, which is we do the exact opposite of what Cramer says, and you can make lots of money. It's gotten that ridiculous. Anyway, so he put out a tweet. I'm trying to find it, which said, let me see if I can find it. I think it was like, I guarantee we will not have.
One thing I guarantee is the Pope won't be American.
Yeah, one thing is certain. The new Pope will not be American. And of course, we got a U.S. Pope. So congratulations to you just drowned all my notes, Doug, in your new charts. Pope Leo XIV from Chicago. So congratulations, Pope Leo XIV.
Robert Borgia or whatever his name is. I don't know, but it is something like that.
I don't follow.
No longer going by that name for again. So
he's changed his name.
America's taken over the world, Kirk.
I know.
Trump called it. Cramer was right in philosophy, but the reality is it's happening. America first. And by the way, the House just passed the Gulf of America.
Yeah. What was the guy's name? Was Robert Prevost?
Prevost, yes.
Yeah. So
he used to be a provost, but now he's a prevost.
Yeah. So I was looking at there's a betting site called Kalshi or Kalshi, and it allows you to bet on certain events that are not in markets, but you can apparently bet here. I don't do it, but I know it exists. Anyway, so his chance prior to getting elected was somewhere in the neighborhood of 1%. He had like a 1% chance of being Pope, and then he became Pope. And Pietro Parolin had I guess like 25% chance. And anyway, so it's funny on how these betting markets, some of them are right and some of them are clearly wrong, but don't know what happened, but apparently won. So if you had bet on him winning, you would have made a lot of money. And so and that's how betting market work. Oh, I forgot to share this. Here, let me just share this. Here we go. That is that was his chances. He's an overnight success, big underdog. All right. So I wanted to share one other thing, and Doug and I are just going to hit a lot of little quick stories because I know there's a ton of them out here. I want to hit this one. It's not related to finance, but it is something I wanted to share for the sake of how shall I say it? Manipulation. It's not really a chart crime, but for manipulation purposes, it is. Let's see. There we go. All right. So here's the news story. Apparently, Earth is going to run out of oxygen, and it will lose its ability to sustain life or photosynthesis as the CO2 declines. Wow, that's pretty scary. That's the headline. Okay. And this is not the only, I just picked this. There's a whole bunch of places that have similar, but that's the headline. Let's get into the details. When is this going to happen? This post-apocalyptic movie and all this stuff. Let's see if I can find it.
2042.
No, I know when it is. I'm just trying to find it.
No, I know you do.
So somewhere in here it says it. Anyway, I can't find it. You know what's going to happen? Oh, here it is. A billion years from now. That's when it's going to happen. We're going to run out of oxygen in 1 billion years. And the transformation could begin in 10,000 years. Oh my God, what should I do? Should I be scared or should I just move on? I'm sorry, I had to point that out because it's just another example of fear mongering. I mean, in a billion years, I think our sun is going to actually run out of energy before that. So I don't think oxygen is our biggest problem. Um, anyway, I'm only pointing this out because it was so comical that is this really something that people should care about? Um, and that's assuming it's right. I, I know my meteorologist in the Boston area can't predict the weather when it's actually happening. I'm not sure how they're going to be able to accurately predict the ecological events a billion years from now. So maybe I could be wrong. Maybe these guys are wicked smart, as they say in Boston, but they're I know they're really bad at math when it comes to a billion years from now. So I'm just going to post this up for fear mongering and move
Well,
on.
here's the only thing I'll say about it, and this is where the confusion is. This is not to take a political stance, Kirk, but I know there's all that one nothing really gets blood boiling more than used to be what religion, money. You didn't talk politics. Well, now it's climate change, and I think the biggest takeaway on this is that obviously there's a lot of people who believe in global warming, which there's a lot of people that don't believe in global warming, or there are people that do that think it's politically slanted. The one thing about this that is interesting is that it's all been more CO2, more CO2, more CO2. We're going to become the planet Venus. Now, the headline is eventually we're going to become the planet Pluto. So,
Well,
it is no wonder people are confused.
so here's the interesting thing. So I actually don't have an opinion on global warming or what's now called climate change or what's now being ignored because the climate the political climate has shifted. Excuse the pun, but but basically, if you think about the concept, like we don't there's no way to conceptualize like how this is all going to work. It's too complex and there's so much involved, and I don't want to get into a rant on this, but the issue I have with the whole concept is not whether it's happening or not, or whether the world's going to end or not. It's the fact that we can't measure it, because if you understand the whole thing, it's all built based on models. Models are based on economics, or they're not based on economics, but economics is a big part of this. Like, what's it worth to put all this effort into this concept? Is it worth 100% of our money so that we all starve? No. Is it worth zero so then we all die? No. So, if you don't include economics, then it's not really a thing. Also, the fact that it's a concept too large for our current science to measure. It's just unmeasurable. You could say you're measuring it, anyway, I don't get in the weeds. The point being is the concept itself. I don't even have to look at it because I know how propaganda is created and proliferated. And to me, it just was it had all the hallmarks of propaganda. And so when things happen like that, it always gives me pause of say, well, I don't know if I buy this. I don't know if it's true or not because I'm not smart enough to know whether it's true or not. And most people are not, even the scientists who study this stuff. But what I know is it's being set up as a manipulative construct, and that's the thing that I don't like. And politics does this all the time. They do it with wars. They do it with any issue they want us to believe that they will propagandize us for or against the issue, and we're meant to believe it. And that's why I don't watch the media, because it's most of it's propaganda. But I will say it is helpful to see what is being pushed out there, because that's what everyone is seeing. And so I look at it from an investing standpoint. This is where the investing, I'll pivot into investing. Is this where investing comes into play? Because if you can see behind the curtain, if you will, of how the propaganda is being pushed out, or what the message is being pushed out, and not all propaganda is bad. I'm going to go against the grain here. If everyone remembers, like the 80s and 90s, like remember Top Gun, the movie? That was a very pro-American movie, and the way I understand it was that was more or less pushed by certainly Hollywood, but also pushed by the CIA and other aspects of the government that wanted us to be patriotic and pro-American. And so there were a lot of pro-American movies around that time. That was propaganda too. I would argue that it's not bad, because any sort of allegiance to the flag and all the stuff that we do to be patriots, that is, in a sense, propagandizing people, right? Is you're brainwashing your kids to be pro-American. And I'm not saying it's good or bad. I'm just saying that's just a reality. That's what we do. Pledge allegiance to the flag. You do that every day, and you get these kids to believe in the country. So as a country, you want people to support your country. So, it's kind of this, well, I don't like propaganda, but I understand, right? And so the point being is you see this stuff all the time. So when you see the hallmarks for this stuff throughout life, everything starts to line up. You're like, all right, what is Hollywood trying to push? What is the media trying to push? Like, what are the themes that are being pushed? And that changes from time to time. It was global warming for about 15 years. In the 80s, in the 90s, it was global cooling. Then it was pollution. Like, these things change, right? The themes change. So what are the themes driving? Are they driving a clean planet and green energy and solar? Is it driving it, for whatever reason, it never drove nuclear, which to me is just, it's a case of politics getting in the way of reality. You want a cleaner planet, but you're not going to look at nuclear. Like, that's kind of stupid. But that's just an example of why the whole issue was nonsense. Because if you were really concerned, then you would have come up with the most obvious solution, which already existed. But rather than inventing new solutions that were less practical. So if you think about themes about what's going on, and if you don't understand how this stuff works, it's going to be hard for you to see. But if you can train yourself to see the BS, it will help you understand the world better, because this stuff goes on all the time. It happens in other countries, happens in our country. And if you can spot it, you can see the hallmarks. Now you can start to notice, oh, well, the government's really pushing this right now. Like the Ukraine war. Like, I personally think we started that war. And there were many, indirectly and directly, I think we more or less tried to kickstart that war. Yes, Putin invaded, but, we kind of caused it behind the scenes. That's my belief. I don't know that for a fact, but I'm pretty confident from what people I've talked to, that's the case. So we got pushed into pro-Ukraine, like, go support Ukraine, all the troops and all this stuff. If you see this, it's like, well, why? Like, why are we being pushed to do this? It's because that's what the government wants you to support as a populace. So understanding that's going to be really important. Now, the topic of today is central banks, which we're going to talk about in a little bit. But I want everyone to understand that there are things that the government pushes you to back, and there's some things the government completely denies. And I will say this from just being a student of history: anytime the government comes out and says everything's fine, your debt is safe, or your homes are safe, or was it the Fed came out right before the global financial crisis. Everything's fine. I don't see any problems with homes. They're not. There's a little dip, but you'll be fine. Like, anytime the government officials come out and say everything's fine, you have nothing to worry about, that's the time you start to worry. Like, in all seriousness, like, the history, the data will suggest that that's the time you should start to worry. So, anyway, the point being is understanding this will help you see through the veil and help you understand, like, where should you be putting your money. That plus the fact that where are all the wealthy people putting their money? Like, tech companies are putting their money behind nuclear and getting more energy to support AI before AI takes all our electricity. And we'll see if nuclear keeps kickstarting, because it's going to take a long time. But I just want to give everybody a framework for that to use in your investing. This is a public service announcement. Hi, my name is Kirk Chisholm, and I'm with the government, and I'm here to help. Doesn't that sound reassuring? Well, let's talk about how they're helping. The government needs your help to make our money worthless again. PPP loans, student loan forgiveness, helicopter money. Let's keep the party going until our money is totally worthless. Don't think it can happen? Sure it can. Just ask Zimbabwe, Venezuela, Greece, Germany, Hungary, Greece, Yugoslavia. Did I say Greece? As a loyal listener to their show, I want to give you free money. I'm giving away free money in one of these hyperinflationary currencies. Go to www.moneytreepodcast.com/free money and follow the instructions to get your free gift. I have a large audience and only a limited supply of these currencies. I'm not the Federal Reserve, so I will run out at some point. Make sure you get yours before I run out. Go to moneytreepodcast.com/free money. Follow the instructions and get your free money today. Before we kick in, Doug, thoughts on your end?
No, I have no thoughts on that. Go ahead and continue. Yeah. No,
okay.
Nothing from that.
So really quickly, I want to dive into central banks, and I want to talk about gold, because there's a theme that we've been talking about for a while, which is gold. And gold has been basically operating under the radar for quite some time. And I'm trying to pull up some charts here, but gold has been operating under the radar for quite some time. It has been, let's see if I can. So if you look at the price of gold has effectively done this. Okay, for more or less, it's operated in a similar pattern where it peaked in the early 80s, and then it's hitting an all-time high now. Now, gold price over time tends to reflect inflation, and it's not a one-to-one. So if we have a 20% inflation in 1 year, it doesn't mean gold is going to go up 20%. However, I would argue over a 20 or 30-year period, it will generally reflect that inflation. It just doesn't do it on a day-to-day basis. So anytime you see, oh, we have high inflation and then gold's dropping, they're like, well, gold's not operating the right way. It is. It's just not the way you think it is. So the thing to think about gold, now, central banks own a ton of gold around the world, and central banks are buying more of it. They have been for the last, they did, I think, in the early 10s, and they have been for the last few years, is acquiring a lot more gold, especially countries like Russia. And gold has historically been a storage of value or a storage of wealth. Families that have been around for a long time have part of their assets or wealth stored in gold, because no matter what, it will retain its buying power over thousands of years. It's just an innate part of us as human beings. We are propagandized to love gold since we're young. Treasure Island, pirate's treasure, gold coins, jewelry. We're going to go find a gold mine, all this stuff that you hear as a kid. And as part of stories, as part of, kid stories, as part of movies, like, oh, we're going to go find some buried treasure. It's always gold, right? It's not, sometimes it's diamonds, but it's mostly gold, right? So if you think about it, it's a part of who we are. It's part of our culture. It's part of many cultures in the world. Our world history, everybody loves gold. I don't think there's any culture that doesn't appreciate the value of gold and the value of it. So it's one of those things that doesn't change. Okay. It hasn't for thousands of years, and it's not going to change anytime soon. Even though the new gold, as people are calling Bitcoin, maybe that's the case, but people are still going to collect gold because it's for jewelry. You don't wear Bitcoin around your neck. You don't wear it around your wrist. Gold has value outside of the fact that it is seen as a quote unquote currency to some extent. But central banks are acquiring gold. Now, there is this theme because the U.S. government, through Trump's action, I forget what it was, about a month ago, said that they are going to acquire Bitcoin as a reserve asset, and they're going to take the Bitcoin that they already had, that they had confiscated from other people, and they're going to take that as a reserve asset, as well as some other ones that they will probably, I don't think those were named, but the ones they already have, they're going to keep. They're not going to sell. So, there's big support in the Bitcoin community because now Bitcoin is considered a valuable asset by the government, and they're going to keep it as an asset of the government. Now, the question is Bitcoin going to become a reserve asset with the same quality as gold for central banks? Now, people have not come out and said that that's the case, but I would argue that is probably already starting to happen, unless they're asleep at the switch, because banks have basically tried to stymie the advancement of Bitcoin for the Biden administration. Because when Biden was in office, we had a supposedly coming in a regulator that was very pro Bitcoin, and immediately once he got anointed, he was very anti Bitcoin, and so while on the surface it seemed like he was going to be pro Bitcoin, he wasn't. And the only thing I can conclude is that the banks basically said, "Hey, you're not going to you're not going to allow this to go forward because we're not ready." Um, I'm theorizing here, and I'm making a theory based on what the way I see the world is. It's the only conclusion that makes sense, because banks are very against it, now they're for it. So I think that they found ways to monetize it and they'll be fine. But the point is, I can see Bitcoin or a similar cryptocurrency or some sort of a stable coin becoming reserve asset of the Federal Reserve as well as other central banks. I can see that happening because that directionally we are going towards some sort of a cryptocurrency or cryptocurrencies by central banks as a holding asset. So I can see that happening. When it happens, I don't know, but I would not be surprised if they are already working on or acquiring some of these assets through different means. Now, gold is currently being acquired and has been going up quite a bit in value. Now, here, this chart is more a comparison between the price of gold and the hours of work, which to me is quite interesting because we have not had a meaningful appreciation in wages since 2000. Like, it's fluctuated, it's gone up, it's gone down. People say, "Oh, it's going up now." Yeah, it may be, but it went down and now it's up. So it's still within this range. And I'll have to show this in a minute if I can pull it up. But our wages have not appreciated in the way that you would expect with inflation, regardless of the fact that assets have gone through the roof. Everything else, even inflation's gone through the roof, but wages have pretty much been stagnant. They're appreciating now, they're going up, but still, as you can see, gold is going up way more. So it would have been much better to just to hold gold than to compare it against wages. So I'll give it back to Doug so I can pull up some of these charts. But I do think it's important to note one other thing is that silver has not been keeping up. And I'm bringing this up, and I'm going to share a quick chart here just for everyone's sake. But when you look at these assets, these precious metals, let me see if I can switch this. There we go. Okay, so here's silver. Silver has pretty much done nothing for the last year or so. Okay, that's silver. This is gold. For the same time period, gold has gone from, basically somewhere around 2000, about a year and a quarter, year and 5 months ago. It's gone from 2000 to 3300. So it's about a 60% growth, something like that. Silver since then, silver bumped up since 23, so it went up a bit, but it was all right here and it's gone sideways. Silver should be matching gold right now, and it's not. So the question is why? Why is silver not keeping up? Well, let's look at platinum. Platinum is also a precious metal. Platinum's gone nowhere, right? Let's look at palladium. Also has industrial uses. Palladium's gone nowhere. Now there's some Russian involvement in here because Russia produces some of these, so there's some politics that contributes to that. Let's look at copper. Copper also, it's gone mostly sideways, but a very wide range sideways. Copper tends to reflect recessions, so if it goes down, it tends to be an indication of recession. See here, if it goes up, it tends to be indication of a growing market. But if you look at gold has uncharacteristically just started to take off. Prior to this, it was not. If you look here, it pretty much went sideways from 2020, halfway through the year, until 2024. So pretty much 4 years, it went nowhere. And then it started to take off. This tends to be characteristic of gold. If you see this, if you see it went sideways here and then took off. Sideways here, takes off. So there'll be a period of consolidation with gold. I don't know when it happens, but at some point, it will start to consolidate. And then it's pretty much, I don't want to call it dead money, but it's not going to grow for a while. So I'm not sure when that's going to happen, but I do wonder when silver is going to catch up. And here's the reason: is we talked about this last time. Silver it's things have come down a little bit, but we're at, I don't know if we're at the all-time highs. We're close to the all-time highs of the gold to silver ratio. I think it was like 103 ounces of silver to gold. I think the low is like 8. So it's not. We're definitely at the peak. So silver should be higher is the point. And if you look at ratios, and I'm going to give it to Doug because I'll get back to this, but ratio investing is really important because it shows things in relation to each other, not in relation to a dollar. Which anyway, we'll get into that. So point being is silver should be higher or gold should be lower, and I don't think anyone thinks gold should be lower. So it's an interesting investment opportunity just for the fact that it's the ratios are so wide that they have to narrow. And this gets into delta spread investing, where you're not investing in the ups or downs, you're investing in the ratio spread, so they should shrink. And that's where you're making your money. So if it widens, you lose money. If it shrinks, you make money. So there's ways to invest that way. And I highly suggest, if you're thinking about it, this is one of those opportunities where things are so wide that not saying it couldn't get wider, but at some point that has to narrow, and that's an opportunity for people who are looking for opportunities. Go ahead, Doug.
Well, I'm going to come back. A lot of things to kind of come into that. I mean, you mentioned it right now with silver and why is it struggling? And I wish it wasn't, because I think I mentioned this before. I got a whole bag of silver quarters. My parents got when the 70s, when everybody thought silver was going to explode, and they got
Junk
it
silver.
and it's still sitting there, just pretty much just. It's a store. It's a store of value, or it's a store of weight. I don't know if it's a store of value. I'm storing it. But it's kind of cool to put your hands in and feel it. Silver has that unique feeling. But other than that, it's just, it's unlike gold, which is purely a store of value, right? And the thing about store, we can come back to this in another conversation, or maybe even if we have time today. But the thing about store of value has a real the thing about store of value options. There you go. Is they have. I'll have to bring my bag on for our conversation at some point. But
Liberty Dollar.
Yeah, the store of value options create some challenges, because like Bitcoin, is Bitcoin a store of value? Okay, people argue it is. Gold, store of value. The thing about store of value stuff is that many times it is just something that's accumulated for storage, right? I mean, even the thing about Bitcoin is right now is not, nobody wants to use it for transactions. They want to hodl it. Gold, treasuries want to hold it. Gold is treated like a store of value, where silver, as you mentioned, it's 50% of its industrial use, 25% of its jewelry and silverware, 15% is investment demand. And that's going to mean that it will be it'll be influenced by one thing that gold isn't, and that is actual economic volatility. It's dragged by weak global manufacturing, especially when we have a pullback of electronics, solar, automotive sectors. It's had a slower than expected recovery in China and Germany, which are two huge industrial economies. That's suppressed it. There's some different, ways. The paper markets dominate the price action on it. That keeps it volatile. So even if there is a physical supply squeeze on silver, it doesn't reflect immediately in the stock price. There's been, and that's something I want to come back to. Right now with the market where it's going, it's been driven heavily by retail investors. But with silver, investors aren't buying it. I think it's narrative. Crypto's stolen that narrative for inflation hedge amongst younger investors. They don't look at silver. Gold is considered a safer institutional bet, especially with central banks buying it in bulk. You look at the end result is silver ETFs have seen a lot of outflows, have not seen inflows. Retail's not buying it either, and they have been just dumping money into the markets recently. Gold has this geopolitical narrative, central banks, de-dollarization. Bitcoin's got a libertarian digital scarcity narrative. Just doesn't exist with silver. On top of that, there's a possibility that there may have been a little bit of a scaring away from silver. Everybody's favorite Wall Street bets, who became famous for things like GameStop and all those. They tried a silver squeeze in 2021, and a lot of investors got burned or disillusioned from it. And so I think from the retail sentiment, that has left silver in a position of not necessarily recovering its credibility. But here's the positive of it, why it could snap back. There's a few long-term tailwinds. Solar panels, EVs, green tech has relied heavily on silver. Obviously, that's another thing right now. Green tech isn't quite, as hot in the news. Monetary crisis, major inflation spike could reignite retail interest. And as you talked about, the gold-silver ratio massively stretched. Generally when we have things that hit, those peak stretching, that's when the pendulum tends to come back. So I think it's not trusted. It's not needed like copper and lithium. It's not narrative driven. It's a very confused asset right now. And I think that's going to continue to make it extremely difficult to be looked at as a real confident place to throw and investing in there. I do want to come back really quickly to, one thing that I was taking a look, kind of referencing on is where, and this is a transition kind of where the markets are right now. Yeah, they've been hot, and there's a lot of questions about what's going to go with the near future in the markets. We hit a point in which the 200-day moving average fell below the 50-day moving average. And generally that's very bearish. And at the time that occurred, we had, significantly sharp drops in the markets. Those markets have come back. And when they cross below, the bottom of standard deviations, we've typically, and almost 100% of the time, once you've got several standard deviations down, you've seen the markets come back. Now they are coming to the top of that standard deviation. There's still potentially room to grow in the markets and charts, but we're still sitting at a 50-day moving average that's below the 200-day. And so we haven't broken out of that yet. I think that what we are seeing today with the markets being down as of the time of this conversation, at least they were going into the live, we had another moment in which our presidency said, I think it's time to buy stocks. Last time it happened, the market rallied. This time, kind of more crickets. I think we're starting to see a tempering of the volatility of stocks based off nothing but rhetoric. And maybe, whether that's a good thing or not, I think it means that there's a numbness that's happening there. What's really going on behind the scenes is we have not really seen an institutional rally or an institutional involvement in this rally. It is important to note that the rally has been almost exclusively driven by retail, as some of the greatest extremes of retail driving that than we've seen in a long time. In general, what that means is there's a real disconnect right now between, the everyday investors and the institution. The institutions are still retail inflow is actually, one of the it's certainly, been one of a huge 17-year bull run. But the retail inflow to the stock market has recently spiked, and it's disconnected from institutional. So one of them's going to give. Of course, I don't know which one that's going to be if this markets continue to kind of temper out and the volatility slows down and the back and forth of rhetoric. Institutions may find that they want to get more into it. There were some comments by Warren Buffett, in his meeting that kind of alluded again to why he's still keeping cash and currencies, which certainly means, there's a takeaway of more concern that he sees there than he's seen in a long time. And he's still staying relatively positioned for opportunity. By the way, I did want to say this, and I'll turn it back to you, Kirk. This is going back to the gold. I wanted to touch on this, but almost forgot. We are seeing a massive diversion between wheat and gold. I mean, we're really seeing a divergence between gold and everything right now. And that's definitely, when you see that big of a stretch, it means that, historically, when there's been a wheat gold lockstep that that was tied to the hip till about 2006. And there's been a divergence between those two since then, but extremely high divergence, at least while they weren't in lockstep in the same positive negative after 2006, they were still, although at less extreme, they weren't completely together. You definitely saw that they would still go up and go down together. We are now in a extreme divergence where wheat has been dropping, gold has been going up. Could that mean that we are going to have food commodity prices? If wheat price going to start to catch up on that? It's hard to say. But the last thing I will say is gold and silver. I'm sorry, gold and silver miners. I talked about this last time, Kirk. Is that gold has been booming, and when gold has been booming, there's this discussion: should we be investing in gold, and should we be investing in gold miners? Gold miners, one of the top gold miners that's out there, just came out and said that they're losing money on operations right now, and I wish I had that data in front of me. I'd quote it. I'll see if I can find it for next time. But they're struggling with being able to extract as much gold as they want. That makes it more expensive on their operations to get gold out of their mines. The other thing is there's a chart that I've got that since the 1968, when you look at gold and silver miners priced in gold, the 70s themselves were not miner friendly. They actually lost over 86% in 11 years between 1968 and 1979. And this is from Kinesis. Anyway, they're in that space. But effectively, what that could indicate, and again, correlation, causation, is that if we go into a stagflation type of environment, if gold continues to and commodities, mining continues to be something, or values continue to be high, but operations, the ability to go in and extract more to try to come into that, creates higher cost. This could be one of those times where you start to see a divergence between the performance of gold bullion itself and gold miners. There are many periods in which they have not performed lockstep.
Well, I would agree with that. There's definitely some discrepancies there now with the miners. They have not been keeping up. Typically, miners are like gold on steroids. So people think of silver as gold on steroids, and miners are like silver on steroids. So it's, if you think about prior to crypto, junior miners were like the most volatile asset on the planet. It would either go to zero or they'd go to the moon. Like there was no in between. And the large miners were typically these almost like utility-like companies. They're so big, they didn't move that much. Like you're talking about, some of them, they said they couldn't make money. I'm actually not surprised at that, because a lot of the large mining companies don't make a lot of money, and they are very inefficient.
A lot of bloat.
Yeah, if you go to the smaller ones, there's actually some business models like royalty model that you can make good money with not a lot of risk and not a lot of expenses. So there's better ways to do it. However, point being is they still go up in price with gold, even though they're not profitable. They're terrible business models. I mean, think about it this way: you're spending some money, you're buying an asset, and slowly that asset disappears. Like, that's a terrible business model compared to like technology and SaaS model, where you get paid every month from your customers and it costs you zero money to produce that money. Now, granted, you have to hire people, but you don't have an asset that's disappearing. So the mining is like one of the worst business models that's ever invented. Yet we need it, and it's essential. And so it does have value, and that's why what people do is they speculate. When it's out of favor, it's in the dumps and nobody invests in it. And as soon as it starts to get in favor, people invest in it and they can make lots of money. So it is definitely a speculative asset class. Now that we have cryptocurrencies, that's more volatile than junior miners, but that tells you something about crypto. So I wanted to pivot here into this one because this happened 2 days ago, and we saw this back here, and I was like, oh, that's interesting with Ethereum. It's really cheap. Why is it so cheap? Why is this? I don't know how it can go much lower. We started to do some analysis, and then yesterday this happened. Ooh. It was up like 15%. Today it's up 6%. Ethereum, Bitcoin. I forget what Bitcoin was yesterday, but it was up a decent amount, and
it's over 100 again.
Yeah, so it hit 101 or something like that. But yeah, it went over 100. Anyway, so the point being is, like, here's an asset. This is the gold of the crypto space, right? Arguably, this is the gold. It's the first one. It's the most established, the safest, if you will, in air quotes for those of you audio viewers. And of course, this is a volatile asset, but this is considered one of the safer ones. Now, you can go into all these other ones, and I'm not talking about the stable coins, but you can go to all these other ones. You got Solana, it's newer. You got Ethereum, also kind of like also kind of one of the original ones. I know some people don't like it, some people do. There's always this debate, but I'm not going to get into that. Point being, it's one of the older ones, and then you've got a few others here, but they're all operating kind of in their own thing, right? So I was curious, why did this happen? Then you start to see, well, there's a bump, and I saw some news. I think the what was it? The Ethereum Foundation proposed an ecosystem with 32 million in grants. I don't know if that's what caused it, but that's the only news I could find. So maybe somebody could tell me, because I'm still curious why it bumps so much. If that's the reason, okay. But regardless of that, we have been overdue for this. There has been a lot of institutional money pushing this. Certainly, retail money is pushing the stock market. But when you see a bump like this, it's got to give you pause. Like, what am I missing? Is this going to keep going? I don't know if I'd buy right now with the huge bump we've had, but it's still like it's an opportunity. Look how cheap it is in comparison to history. So, if you're trading and you're putting money in cryptocurrencies, most likely you're trading to some extent. You have to look at this and say, where is it cheap and where is it expensive? I want to buy it down here. I don't want to buy it up here. And I know some traders will argue, well, you should buy it up here. That's fine. That's not how I do it. I just wait till this happens and I buy it here. And then I wait till this happens. Then I sell some, wait for this. This is how you should invest in cryptocurrencies in a lower risk manner. Buy Bitcoin here, sell it here, buy it here, sell it here, buy it here, wait. And then, some people sold it, some people, whatever. The point being is you have to understand these are the cycles of the cryptocurrencies. So I don't know if central banks are going to buy these. I do think that there is, from what I understand, there is talk about them acquiring these globally, as well as other ways to either create their own. But I do think that cryptocurrencies, in some way, shape, or form, whether it's a Fed coin or whether it's a stable coin or Bitcoin, whatever it is, there is going to be some format where they're going to be holding this as a reserve asset. I think it's inevitable. I think we were all on the same page for the most part that this is going to be a thing. And I think everyone's planning on it. So that being said, I'm waiting to see in the next few years with Trump that there'll be more effort to push this. And I think that's going to happen. We do have a supportive administration, supportive regulators. And so I think it's just a matter of time before the cryptocurrency community kind of gets together and says, all right, this is the best path forward with the people in power, because I think that's what you need to have to happen. It can't be just the libertarian crypto people deciding what's happening, because that's not going to happen. There needs to be some get together of heads with politicians to figure out the best way forward without destroying entire industries, because that's effectively what things like cryptocurrency, AI, they will completely destroy industries unless it's somehow massaged into the economy. And rightly or wrongly, that's I think the path that needs to happen. So Doug, we got a few minutes left. Final thoughts and
Yeah, I was actually looking at it now, and if it's updated, I think Ethereum's up 15% today. So it's like 40% in the last 5 days, and it's still down 29% year to date. So it's and it's definitely seems to be turning there. But yeah, no, well, a couple of thoughts. I did have a chart here. I started to talk about it. Retail investors brought a record number of $40 billion of U.S. equities in April. If you look at where they were making their purchases, they weren't really purchasing much of anything in 22, between 22 and 2024. All of a sudden it spiked. Again, one of the takeaways on this, not that it's necessarily, always a fact, but retail investors often enter the market at later stages. So the question, there's a reason that there's a term called the dumb money. So if they're kind of coming in now that we've had this, rally, is that a time in which, again, you look at, contrarians would look at that and say it's time to get out. Again, that's not necessarily something that I'm going to, we're certainly not going to recommend anything here on that. We talked about last time, we're seeing that home sellers, 44, I'm going to switch that really quickly. Some good news, bad news. 44% of home sellers gave concessions to buyers in March. That's near the highest on record, increased by 10 points July 2024, and has doubled since June 2022. Keep in mind, these concessions are now being given at record levels at a time in which it's supposed to be the best market of real estate. A lot of people would say, well, we're out. Just wait till we get into the buyer's market. Top 10 moving destinations in 2024 per Penske. Houston was number one, Kirk. Atlanta, San Diego, Dallas, Orlando, Charlotte, Las Vegas, Chicago. And then, we don't see my Minneapolis, or we don't see New England on those, on either, on that travel schedule. So, again, we're probably staying put more than people are moving to us. We talked about people falling behind on college, on education loans and on mortgages. Well, now there's a new data that shows that the percentage of borrowers at least 60 days late on car payments is at record highs. I am looking for my point here that I had on housing. There was, I'll just stay on the negative. A new story said 1 in 3 first-time home buyers now regret the purchase. The rate of regret was even higher amongst recent buyers. I've also got something I'm going to tell you, Kirk's negative for you and me. And I'm really sorry to bring this to your attention, but what has always been kind of the view of Gen X?
Leave me alone.
Leave me alone. And we sure as heck have been left alone. We're the middle child of generations, right? It's that we leave me alone and we're forgotten. And well, unfortunately, what that's going to lead to is that we're going to get skipped again. And how are we going to get skipped? There's new data that's coming out talking about, again, we're going to, housing, I'll stay on this, 7,000 boomers dying per day. That's talking, could lead to 3,000 houses with coming to the market. So anyway, on that, but they are now looking at new data that says the millennials, so we've been skipped, are going to end up being the wealthiest potential generation in history. We're talking because they're looking at the passing of their parents, and their grandparents are going to pass trillions and trillions of dollars to millennials. So I'm sorry to tell you this, Kirk, you're getting skipped. And we're just going to have to keep making money ourselves, in order to
ourselves. It's our generation. Do it ourselves.
Do it ourselves, right? We're built for that. But let's see. I'm kind of all over the place. I look at the data, and I apologize for listening. I'm going to go back to it. Individual investors have been the net buyers of equities for 21 consecutive weeks, the longest week on record, according to Bank of America. That's more than double the previous records of 21 and 2022. I do want to note that this just is a sign of the times. If retail and individual investors have built the record in 21, 22, and now 2025, listen, it's a new world. People are doing way more investing themselves than they ever have, and that's not going to change. I can't find it. Unfortunately, it's driving me crazy. We are seeing too another thing that might be helping this current rally. U.S. companies announced almost $233 billion in buybacks in April. That's the second highest since the data began in 1984. Sharp reversal in May. There was only $39 billion in buybacks. So companies, part of what might be helping the stock market a little bit, not only retail investors jumping in, but again, if companies buy their own stocks, those buybacks have often been a way that companies have countered the market trend. If you reduce the supply of your shares that are on the market, it's going to help keep those stock prices up. So is that a bullish sign? Well, I mean, it's great if you own the stocks, but it's not necessarily an indicator of institutional or a greater focus of investing. You combine the retail investors with those buybacks, it would lead to at least a temporary spike. 84 trillion, by the way. They're going to call this the great wealth transfer from baby boomer parents and grandparents to millennials. That's per Fortune. Again, we're running out of time. There's a lot of other things I could jump into, but I will go ahead, and if you want, I can wrap this up, Kirk.
Yeah, just wrap it up. I think next week we'll talk about there's a trade. There's a tidal wave coming in the next probably week on the trade ship, and we'll kind of talk about that because there's a ton of data that's kind of, there's stories that are coming out
Mm-hmm.
Not a lot of data, but I think we'll start to see it next week. So I think next week we'll talk about some of the issues with China that they should start to hit right around in the next week.
Well, those of you who've been listening heard us talk about it a little bit last week, so we'll start to get
Yep.
some data next week to get into. I agree. Listen, I'm going to wrap this up. When we talk about market performance, inflation, future risk, we tend to focus on things like interest rates, portfolio allocation. But one of the most underestimated threats to wealth for high-income families, it's college. It's a silent disruptor of retirement, liquidity, and legacy goals, especially when there's no strategic plan in place. So let me leave this with you. Those who've been listening know I'm Douglas Hager. I'm founder of Emergent College Advisors. It's important to know there's only 5 real ways to pay for college: cash and assets, loans, home equity, government aid, or leveraging the assets you already have. And without a strategy, every one of them can sabotage the very plan you've worked decades to build. The Education Data Initiative says the average 4-year degree is going to be $143,000 for public schools and $222,000 in private schools. If you're looking at one of the elite schools, as many of you listeners may, and if you live in the Northeast and listening to this, you're looking at over $300,000 of cost per child. According to J.P. Morgan, nearly 40% of high net worth families say college expenses have directly impacted their retirement or estate planning. So this isn't just about affording it. It's about funding it without destroying momentum. We help families save on college, not just for it. And that means smart aid positioning, merit strategies, capital preservation, and tax-aware planning, because the money you have and how you pay for college can mean more than the cost you pay. Visit mergentcollegeadvisors.com. That is MERGENT, mergentcollegeadvisors.com, to get clarity, to build a strategy, and to protect what you've worked so hard to build. Smart money doesn't guess, it plans.
Awesome. Well, Doug, I always appreciate you coming to the show, sharing your wisdom with us. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.